This is the Domain Magnate Show, where you'll learn everything you need to know about buying, optimizing, and selling online businesses with your host, Michael Bereslavsky.
Hello and welcome to this episode. Today I'm going to talk about what is the ideal online business to buy. And this is a question I get asked very frequently by buyers and investors. So today, finally, I'm going to give you a good overview of what is my ideal business to acquire. And for our more dedicated listeners, they might know that we look at businesses through a framework of 3 parts: numbers, opportunities, and risks. And that's how we are going to look at this question of the ideal business as well. First of all, we look at numbers. So an ideal deal, an ideal business should be stable, where you can see the numbers, revenues are stable, the traffic is stable or growing, stable or steadily growing. You should be very careful with businesses that have a really sharp trajectory going up or going down, because it's very difficult to fix businesses that are plummeting consistently. You might be able to buy them cheaper, but it's often very difficult to reverse those trends unless you really know what causes them and have a pretty good idea of how to improve it. It's also dangerous to acquire businesses that go up very rapidly, because anything that goes up also comes down. So it's often, and also keep in mind that it's actually more likely that it's going to come down rather than it's going to go up, because if the revenues have been climbing up and up and up, sellers are usually very smart and strategic. So they would sell a business at the time they think they are at the peak. No one would want to sell a business which they believe is going to just keep growing and growing and exponentially. They would just keep it and sell it later. So that's really important to understand. Also, when it comes to numbers, we should look at the price. The price should be within a reasonable market value range, and preferably a little below it. Especially for most of our private deals, we're usually a little below the market because the sellers don't have to pay a broker commission. Also, it's important to avoid overpaying. Unless you get something absolutely amazing, which is very rare, it's generally best to avoid overpaying, because the market as it is right now is pretty high. I would say that the multiples are currently quite high. So you should always try to acquire businesses at reasonable market values. This also gives you a potential to resell for a similar price or slightly higher. And then you overpay, you know that if you want to resell a business, you have to really be able to grow it. Otherwise, you will probably have to sell it at a loss. So to summarize numbers, you want to see something that's stable and growing and consistent, and also has some reasonable trends. You don't want to see some numbers that are overly seasonal. Like, for example, we've seen businesses that are focused on a specific event that happens every year. And that's a little bit dangerous, because you only get your revenues from a short period of time, like sites about Christmas. So next, risks. The risks come from several different avenues. First of all, monetization risks. So you want to see a business that has ideally multiple sources of income. It could be from selling multiple products or services, or it could be through using different payment processors, different affiliate programs, or just different monetization methods. So you don't want to see just one monetization method that is somewhat risky, because if the business is overly dependent on one affiliate program, if the program is discontinued for some reason, you could lose the whole business. Also, it's important to understand the risk of specific monetization methods. So, for example, if you are using a very small affiliate program that is partnered with a small business, that's generally much higher risk compared to, for example, Amazon Associates. That's been around for a while. Next, we look at the traffic risks. How do the customers find the business? Where does most of the traffic come from? And we usually look at the Google Analytics, look at the other different traffic stats to see is most of the traffic coming from one or several smaller pages, or is the traffic spread evenly and equally throughout the site? Also, and this, if it's organic SEO traffic, it's important to understand what other SEO methods that they used. Is it a completely white hat, or has it been using more aggressive SEO techniques, which are definitely to be avoided? Also, if there are multiple sources of traffic, that's generally preferred. So if it's, for example, organic Google traffic and also some social traffic and a little bit of paid traffic as well, that's much better, because you know if one of them drops, you'll still have the others. So you're not going to lose all your revenue on one thing. Next, after the traffic, we would look at the niche or industry that the business is in. What is the trend of the industry? Is it growing? Is it stable? Or is it something that's going down? So ideally, we want to see an industry that's very stable, or maybe it's slowly growing up. Or maybe it's an emerging industry. That's great too if it's emerging and going up, but that can be a little bit higher risk, because if it's emerging and it's growing rapidly, you might not know whether or not it's going to last very long. It's also important that the content of the product is evergreen, that it's not something seasonal that might not be relevant in a couple of years. For example, we've had many websites that focus on a specific model of iPhone or a specific models of laptops or some other technological items. So those kind of businesses generally need a lot of updates, because the popularity of those topics drops quite rapidly as new items are released, new versions. Next, it's important that there are no legal risks. And that's very important, because that could kill a business quickly. If the business is using some copyrighted or trademarked content in order to generate revenue, that might end up with you getting sued and losing the business and possibly even more. And finally, we look at operational risks. How difficult is a business to operate? And is it a good fit for the operator that you are buying the business with, or yourself, if you are planning to operate it yourself? Is it a good fit for the skills? Sometimes businesses can be really great in terms of numbers and opportunities and other risks, but they're just way too complex to operate. They have dozens of different accounts, dozens of different processes, and you need a whole team to operate them. And if it's a sizable business and the numbers make sense, that's good. But for smaller businesses, it's recommended to avoid those excessive complications. So while you do want some diversification, you really don't want to have businesses that are too complex to operate, because it's going to be costly and also difficult. So Domain Magnate, we generally, this is a big part of our risk assessment, is looking at operational risks. And we also look at, is it a good fit with our skills? And then finally, once we've reviewed all the different risks, and for an ideal business, we want all the risks to be reasonable and mitigated by by other factors. So we don't want any excessive risks coming from monetization or traffic. And an example of an excessive risk would be a new website which is using very aggressive SEO methods and all of its traffic is coming from Google search. So that's just asking for trouble. Next, we'll look at opportunities. What kind of opportunities do we expect from an ideal deal? We want to see opportunities to grow the business over a longer period and to grow it substantially. So we want to see, if it's a content business, we want to see that it's a wider niche where we have a lot of opportunities to cover different topics. If it's a product or a service business, we want to see that we have more products or services we can add. And if it's selling some affiliate products, we want to see that there are more and better affiliate products, affiliate programs potentially, which we can work with. Also, the industry can present substantial opportunities. If the industry itself is growing, if the industry is expanding, that's always preferred. If it's a software product or SaaS business, it's good to see that there are more features we can add or that we can expand into other similar topics potentially that the users would be interested in, so that we can add some add-on products or services. Also, another item which is often missed is resell opportunities. How easy is it to resell this business? And for an ideal deal, we want a business which is easy to resell. For example, content website about cats, which is like 3 years old, is very easy to resell in this market. If you list it for sale in a marketplace or anywhere, it could get sold in days or even hours. While a business that's about some very specific medical term or disease could be quite difficult to resell, because medical sites can be difficult to operate, difficult to maintain. You need a very qualified writers, and it's also high risk. So most people might not want to buy it. Or if it's an adult business, most buyers just don't want to deal with that. So you have to keep in mind also how difficult is it to buy or sell. And we currently only acquire businesses and websites in English, so they're only targeting English-speaking audience. So if the business is in another language, also that's a different story. And most buyers usually don't want to buy those businesses either. Additionally, in a great deal, you want to have opportunities for resale to strategic buyers or end users, because this is where a lot of money is potentially available. If you acquire a business at a 3x multiple of profits, and then you can resell to a strategic buyer for like 10x profit multiple. That's some incredible opportunity for profit. Other opportunities might include some partnership opportunities with other companies or some synergy opportunities in your own portfolio. For example, we had at some point we had a cluster of websites about beauty in our portfolio, and so we realized that it's good for us to buy more similar sites, because we now can monetize them better. We have higher CPA rates, higher revenue share offers from affiliate programs. We have a lot of expertise in that niche. We can write good content at lower costs. So there was quite a lot of synergy in that. And we also realized that we can grow these businesses together and sell them together, which is something we did at the end. So opportunities can come from different sources. And finally, is it a good fit? Is it a good fit for the operator or for you? And so for us at Domain Magnate, we don't have as much experience with operating FBA businesses. So we don't look at them, but if we do have a good opportunity and we consider to buy it, we always tell the investor that we don't have a lot of experience in that, but we plan to mitigate it by having connections with other operators, with agencies that can help us if we need to, and also that it's a business that's easy to manage comparatively. So make sure that the operator that you are working with has experience in this specific business. And we specialize on content and SaaS businesses with mainly organic Google traffic. So that's where most of our expertise are. And this is the type of businesses we generally buy and target. And actually, the final question is, do you actually like it? Are you actually proud to own this business? Is this a business that you would like to tell your friends about? Or is it something that you would rather just no one ever knew that you own it? And that's actually quite an important factor to consider as well, because it might bring you more joy and pleasure in life. So why not go for that? Thank you for listening. So to sum it up, we've learned what is the ideal business to buy. And the ideal business, based on our framework of due diligence, is one that has reasonable trends in numbers, so that the trends are stable or going up, and that the price is around or below the market value. And it has some limited risks and some great opportunities for growth or resale. And also something that fits the operator and fits you so that you like it. Now, if you want to see some ideal or some really great deals, you can sign up for our Buy Manage program. The Buy Manage service allows you access to our network of deals, and you'll be able to see it along with our due diligence, all the best private deals we have currently, and then you can go and acquire them. Thank you. Thanks for watching.
Domain Magnate is a leader in buying and selling online businesses with a proven track record of expertise gained from over 300 deals since 2004. To learn more about how we can help you acquire or exit a profitable online business today, head over to domainmagnate.com for more details.